Wow, is this a confusing market or what? This is Dean Odell with Seven Gables Real Estate and the Odell Group. Today is March 23rd. We're going to sort it all out for you. We're going to start with the Orange County charts, and then we're going to finish with the Tustin charts. So let's get started. Let's start by looking at the active listing inventory year over year. We currently have 2,168 homes on the market, which is a decrease of 50 homes in the last couple of weeks. Today's inventory is the second lowest recorded in March since tracking started, with last year being the lowest. Last year at this time, there were only 1,556 homes on the market, which is 28% lower than where we are today. To compare this to a more normal market, we like to take a look at the 3-year average between 2017 and 2019, which was 5,286 homes, or 144% higher than where we are now. So if you look at this chart and you look at the blue line there, that's for 2023, you're going to see that normally at this time, we are increasing inventory, or we are maybe flat, worst case scenario. The only other time we saw a downward trend was in 2021, if you look at the red line. And that was the hottest year for real estate. So the question is this happening again? Well, let's go take a look at the demand chart. In the last 30 days, we've had 1,567 homes go into escrow, which is up 62 pending sales in the last couple of weeks and is the highest level since September. Last year, there were 2,284 pending sales, which is 46% higher than where we are now. And prior to 2020, the 3-year average was 2,514, which is 61% higher than where we are today. It's normal for demand to increase this time of year, and although we are up, this level of demand is the lowest since 2004, which is lower demand than there was during the Great Recession. So we're going to take a look at a special listing versus demand chart. It is comparing the inventory or supply versus the demand, and the demand being in the dark blue color. So you can see this goes back to 2012. You can see how much listing inventory is usually higher than demand. And then you scoot all the way to the right side, and you can see that the difference between supply and demand has diminished further, especially this year. In July of 2022, the difference between supply and demand was 2,348 homes. Now the difference is only 601 homes today. It's the smallest difference since May of last year. So we have the 3 busiest listing months of the year coming up, and we are hoping to see more inventory hit the market. That is March, then April, then May. May being the busiest. And interest rates are definitely going to dictate what happens in those months. Sellers are hunkering down because of interest rates. And if the spread between their current interest rate and what they can get to move is too much, then they're going to stay in their houses. So we're hoping that interest rates are going to be floating down, which is going to make more sense for sellers to put their homes on the market so that they feel better about selling and moving. Next, let's talk about the average expected marketing time year over year. Currently, our days on the market for Orange County is 42 days, which puts us in a hot seller's market once again. Last year, we were also in a hot seller's market, but at a much faster pace of only 20 days. The 3-year average prior to 2020 was 63 days, which is about 2.5 weeks slower than where we are today. Now, if you guys recall, in January this year, we started at 84 expected days. Now, it's normal to go from a winter market to a spring market and see the amount of days go down. So we're cut it in half from 84 to 42. The question is, are we going to cut it in half again and get down to those historical lows of only 20 days? Well, we're going to see if it's going to speed up or slow down in the next few months when all these listings hit. But I can tell you right now, interest rates are going to have a whole lot to do about it. So now let's move to my favorite chart, which is the expected marketing time broken down by price range. If you're a buyer or seller in Orange County, this is the best way to see what's going on in your price range. You can also see the various market types reflected by the days on the market. Taking a look at the numbers, the expected marketing time last year versus this year has increased in every price range because last year was crazy, but some of them are only slower by a couple of weeks. As you can see, everything up to $2 million is considered a hot seller's market. The $2 to $4 million range is a slight seller's market. The $4 to $6 million range is at 151 days, and we're just calling that a slight buyer's market because it's only 1 day off of the range. Anything above 6 million is still in a deep buyer's market. Okay, so when you look at that chart, you can see that 42 days might be the average, but that's an average. You got to look at the price range. You got to see where are you shopping, because every market is different by price range. Okay, so let's move to the next chart, which is Tustin data, which you are only going to find here on Tustin Talks. Every 4 weeks, we show you the statistics for the Tustin micromarkets in the 92705, the 92780, and the 92782 zip codes. Today, let's compare the data from February 2023 to 2022. So what do I see in this data? I see some changes here. I'm looking at a lot of red arrows. I'm looking at 19 red arrows versus 11 green arrows. So let's dissect this thing. So what I'm seeing in this chart is also reflected in the county data. And that is that the actives are up quite a bit. I mean, look at the for sales. I mean, the for sales are up a lot from last year in these 3 zip codes. Now, countywide, if you remember, they were up 28%. Now, what's interesting, if you look at the new listings, you'll see that the new listings are way down. So it's just very confusing, because it's like, okay, well, does that mean people are going to not move and hunker down? Or does that just mean we had such a rainy season this last 3 weeks to 4 weeks? It's really dampered, no pun intended, to people to put their house on the market. So it's going to be interesting to see how this plays out. But if we look at the next line, the solds are down roughly a third. So any way you slice it, we're seeing more listings and less homes going into escrow. So the decreased demand, right? And if you take a look at the average sold prices, what you're going to see is the 2 more expensive zip codes of 92705 and 92782 that carry higher average prices, they are going down. Now, that doesn't mean that prices are tumbling. It just means that people are not spending as much money to buy houses in those zip codes. Those, of course, are the more expensive zip codes, which means people tend to have to borrow more money. So interest rates can be taking some kind of effect there. So next, we're looking at the list price to sales price ratios. And if you look at those ratios, you can see how they're starting to change from last year. And we're down at 98% and 96% in 92705, 99% to 97% in 92780, which we know is a lower priced zip code. There's a lot more activity going on. There's more buyers that can afford the lower you go down the price scale. So we are still seeing some pretty strong prices there in terms of how they relate to the list price. So look at the average days on the market, up in all 3 zip codes, right? We're going to have to keep an eye on this and see where it goes from here. But the one thing you can take away from this is active listings are up and pending sales are down. Whether you're looking at Tustin, whether you're looking at the county. And to me, that reflects a change in the market. It's like the skeleton in the closet that people aren't seeing. But we're going to have to check out the next couple of months and see if this does in fact turn into a trend. But right now, let me get to you on my seller and buyer advice. So I'm going to give you my advice now, but first you got to subscribe, because we are only 8 subscribers away from 1,000 subscribers. So come on, help us out. Hit that subscribe button. You're going to get this great information and our advice sent to you every 2 weeks. Okay. So let's start with buyers. I would just continue to be patient. Now, I will tell you what we're seeing in the market there this week and the last week. We have definitely seen increased activity. We are definitely seeing multiple offers. But things aren't quite as crazy as they were, but it's still very, very competitive. What you don't want to do is buy something and regret it. So let's just be sure that you're buying for the long term. That's the house you want, and just be patient, okay? Sellers, you know what? I want to read you a quote from the Orange County Housing Report that Stephen Thomas writes, which is where a lot of our data, most of our data comes from. So it's not just my opinion, because I totally agree with him. So hold on one second. Okay, a warning for sellers. This is not capital N, capital O, capital T, okay? The insane market from June 2020 to May 2022, where values were screaming higher. Sellers may have the advantage, but overpricing a home is futile. Homes with deferred maintenance or a poor location will be extremely challenged to sell in this market without adjusting the price. Price a home according to its fair market value based on condition, location, upgrades, amenities, and age. Multiple offers may be back, but sellers should not get overzealous. So I can't say it any better. All right. The reason we are seeing more inventory on the market is because there is a lot of inventory that is sitting. Okay. This market is busy enough, depending on what price range you are. If you look at those average marketing times, if you're not getting offers within your average marketing time, within your price range, there's a very good chance you're overpriced. Okay. So we've actually had experiences where we lowered the price a little bit and ended up with multiple offers again. I mean, crazy. We had a house that was, what was it, 1365, and we lowered it to 1315, and we got 4 offers and it went for 1335. So, I mean, you guys, pricing is super critical in this market, and we understand it because we have a team of agents that also represents buyers. So we're not just people that sit there and say, hey, we're the greatest listing agents in the world. We only work with sellers, right? We work with buyers and sellers, which, by the way, makes us great listing agents because we understand the market and we understand how to get you top dollar and how to get your house looking good. We have all the services you could possibly imagine to help you achieve top dollar. So give us a call and we'll give you the right advice. And buyers, hang in there. Your dream home's out there. It will come to market. Be patient. So we'll see you guys on the next Tustin Talks. Thanks for tuning in.